Welcome to Financial Revelations. I am David Safransky, your slightly tanned host, back from St. Thomas. Little spring break. We didn't do a podcast last week, but we're back in the saddle again. You can always reach us at 1-800-344-2534. You can email Corey questions at corey@epsf.com. And every Thursday morning, I'm on WCRF 103.3 in Cleveland, but you can get us on the Moody Radio App, available in your app store, and you can listen anywhere. I want to let you guys know, too, we're going to do a missions trip in the Amazon. If you'd like to help support a pastor, you can donate. Reach out to us. We'll tell you how to do that. It costs about $1,500 to about 15, maybe a little bit more than that, depending on the cost of the flight. So if you want to, any little bit helps. We really appreciate those of you who have reached out and helped. So all of that contact information is scrolling down here someplace. And so I'm going to be back every week now. So what I want to talk about today, I want to just review the Fed a little bit because they have a meeting coming up, Fed meeting May 2nd and 3rd. They're going to hike rates. They're going to go 25 basis points. They also have a meeting in June, which they're also going to hike rates at. I feel so confident that those two things are going to happen. They also have a meeting in July. I'm not 100% confident that there's going to be a rate hike there. I think we're going to need to see some data. The inflation numbers are lower than what they were, but they're still unacceptably high. Unemployment is actually lower than it was at the beginning of the year. So they're going to want to see unemployment in the fours. I don't think they're stopping until unemployment is at least in the fours and inflation is at least below 5. We don't have either one of those things right now. They're raising rates. So anybody who says they're doing a pivot right now, I think is just sopping wet. So because of rates, it looks like the Fed is going to be raising rates. Bond yields are starting to creep back up after the banking debacle that we had, 6-7 weeks ago. Rates got super depressed after that happened, and now they're starting to float back up. I bought a 5% short-term government bond yesterday. It's like July, so you don't actually the equivalent rate of return over a year would be 5%. You're not getting that whole 5%, but they quote it in an annual rate. So, but you are making some money off of it. So we're back in the bond market, especially short term. It's kind of like a holding tank right now. There's no risk in government bonds. I know that there's a lot of people talking about the debt ceiling and defaulting, and we're not going to default. We're not going to default. So if you're wringing your hands and staying up late at night and waking up in the middle of the night thinking about the government defaulting, it's not going to happen. So there's going to be an 11th hour solution. Probably no one's going to like it, and I guess that's how they get politics done. They're making the sausage. First quarter reporting has started in earnest. Now, when I spoke to you last time, a couple weeks ago, I said I think it's going to be a rough start. Actually, it was a good start. Now the rough part begins because banks are reporting. So the start of earnings season started out better than what I thought it was going to be, way better. And now that we have regional banks in there, it's not going so hot. So I think you're going to see a lot of mixed bag in earnings and for the next couple of quarters, because a lot of times it takes the market slow down a little bit of time to catch up to some businesses. Now, American Express came out. People are flying, people are eating out, people are doing all those things. So it could take a little bit of time for those markets to catch up. So I think you're going to see a lot of mixed bag until we hit a recession. Then the Fed will lower rates, start to bring us out of it. So that's what I think is going to happen. And of course, I could be wrong. It wouldn't be the first time that's ever happened. So I wanted to answer a question today in honor of tax day, even though it was Monday. I'm going to answer this question anyway because I get this question a lot, and it drives me crazy when people ask me this. The question is, what should I do with my tax return? And I say, well, why are you even getting a tax return? Don't let friends get tax returns. I don't want you to get a tax return. But people will say, well, wait a minute, that's my vacation fund. That's my Christmas fund. That's, I use that to pay off my credit card debt don't run credit card debt either. If you're running credit card debt, we got to get you into a better frame of mind where I love credit cards. I think you should use credit cards, use them all you want, but every month without fail, pay off the balance. And if you can't do that, don't use your credit card again until the balance is paid off. Credit card debt is one of the worst. It is the worst consumer debt to have. It's expensive for one thing. And I know a lot of people have 0% credit cards or, slightly lower. It's still a leaky valve that's leaking your finances right out. So I don't want you to run credit card debt. But if you get a tax return, I want you to think about it like this. So you get the tax return. Let's say you file your taxes in February, or maybe you're fortunate you get your W-2s early in January and you file it right away. There's money in your tax return that you could have had last January. So the government had your money for an entire year, and you could have had that money. You could have been putting it into your high yield savings account, or, I don't know, going out to dinner on it, whatever you wanted to do. But the government has your money for a whole year. And then there's money that they had from February. And so you see where I'm going here. They're holding your money, which you didn't need to pay them, all year long. So I want you to go in and adjust your withholding if you're getting a tax return. There is a better way. You could have had it. It's not a Christmas fund, and we can teach you a better way. I've always thought that if you have to pay the government $500 at the end of the year, so you do your taxes and here comes the bill. You owe $500. Well, I think that's a bullseye. I think you hit the nail right on the head. So if you could get between owing them $0 and getting back $0, or owing them $500, I think you hit the nail right on the head, because now you had their money all year long. They didn't pay you interest, and you're not paying them interest. So as long as you pay on time, you're going to be fine. So I don't mind owing a few dollars. Now, if you got a tax return of $100 or $200 or $300, okay, I'll go up to $500. If you get a tax return of $500, you kind of hit the nail on the head too. But if you're getting a tax return of $5,000, that's $600 a month that you could have had in your paycheck that you just gave away. That could have been going into your 401k. It could have been going into your IRA. A lot of things. You could have been donating it. You could do anything you want with it. That's the point. What does the government do with your money? They support wars all over the world and do dumb things with it. So I want you to pay as little in taxes as is legally possible. Use the tax code exactly the way it's written. Don't get a tax return. And for heaven's sakes, if you call me and tell me you're going to get a tax return, it's okay if I yell at you a little bit. I'll be gentle, I promise, maybe. But I don't want you getting a tax return. Taxes are kind of a funny thing because tax laws change all the time. You might file your taxes. There might be a credit you didn't know about. So there are times where you can't help but get a tax return. And a credit is different than a deduction. A credit is a dollar for dollar offset on the tax you owe. So if you have a $1,000 credit and you have a $1,000 tax bill, your tax bill is now $0. So I understand that there's things that happen that you can't really plan for, and the laws change. And so, if 1 year you get a big tax return, all right, whatever. Don't make it a habit. And it's the way you plan your finances. If that's what's happening, if you use a tax return to plan your finances, I think you're doing it wrong, and we need to get it right. And we can get it right. It makes sense to pay an accountant, a CPA. Now, let's say you do your taxes on a piece of software. If they're simple, well, that's okay. But if you're getting a big tax return, go pay a CPA $200 one time to see how they do it. So they can get your tax burden to $0 and your return to $0, so you have more money in your paycheck and you can be contributing to your retirement plan. So as always, I want you to feel comfortable reaching out, asking questions. We do work with people on a personal basis too. If you wanted to do that, you can use those contact numbers that are scrolling below. I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.